In November 1956, the most powerful empire in human history was destroyed in 11 days. Not by a war, not by a revolution, by a phone call. The United States told Britain, "Stop your military operation in Egypt right now, or we will crash your currency, block your emergency loans, and watch your economy collapse." Britain surrendered within hours. An empire that had ruled a quarter of the earth, whose currency had dominated global trade for a century, was brought to its knees by its own creditor. Not because the army was weak, because the economy behind it was hollow. But here's the thing nobody talks about. The Suez Crisis didn't destroy Britain. Britain was already destroyed. Suez just revealed it. The real damage happened over decades, following a pattern so consistent, so predictable, that once you see it, you can never unsee it. Because every dominant empire in history has gone broke following the exact same 5 stages, Britain completed all 5. And right now, in 2026, the United States is in stage 4. Let me walk you through each stage. And I want you to decide for yourself how far along we really are. The first stage begins the moment a country's currency becomes the world's default. Not just popular, default. The currency everyone else is forced to use whether they want to or not. For Britain, this happened gradually through the 1800s. The British pound became the language of global trade. If Brazil wanted to buy cotton from Egypt, that transaction happened in British pounds. If a central bank wanted safe reserves, they held British pounds. If an international contract needed a denomination, it was written in British pounds. This sounds like pure advantage. And for a while it is. And when the whole world needs your currency, you can borrow almost without limit. Interest rates stay low because demand for your money never stops. You can run deficits year after year because the world absorbs them. But this is where the trap sets. Because unlimited, borrowing doesn't feel like a trap. It feels like strength. Every year the debt grows, and every year nothing bad happens. So leaders borrow a little more, then a little more. The economy becomes addicted to cheap debt the way a person becomes addicted to painkillers. It solves every short-term problem while creating a long-term catastrophe. Now, here's America in 2026. The US dollar replaced the pound as the world's reserve currency in 1944. Since then, America has inherited the exact same superpower and the exact same addiction. Today, 59% of all global foreign exchange reserves are held in dollars. Oil is priced in dollars. Global trade is settled in dollars. If you want to do business internationally, you need dollars. And just like Britain, America has used that privilege to borrow at a scale that would have destroyed any other country decades ago. The national debt has crossed $36 trillion. We add roughly $2 trillion more every single year. Britain sat in stage 1 for over a century. It felt like permanent power. It was actually the foundation of permanent decline. America has been in stage 1 since 1944. That's 82 years. And stage 1 didn't destroy Britain. What destroyed Britain was what came next. Stage 2 is when the empire starts spending more on maintaining its global military presence than its economy can actually support. Not in a single dramatic moment, but gradually, base by base, deployment by deployment, conflict by conflict. At its peak, Britain maintained military garrisons on every continent. The Royal Navy patrolled every ocean. The army fought simultaneous campaigns in India, Africa, the Middle East, and Southeast Asia. Each one was individually justified, protecting trade routes, defending allies, securing resources, maintaining order, but nobody ever added up the total bill. By the early 1900s, Britain was spending roughly 40% of government revenue on the military and interest on debt. The cost of being everywhere is the cost of being nowhere else. Every pound spent on a garrison in India was a pound not spent on infrastructure at home. Every ship patrolling the Pacific was a factory not built in Birmingham. And the critical thing about military spending is that it doesn't generate economic return. A factory produces goods you can sell. A military base produces security you can only hope you'll need. When you're borrowing to fund military dominance, you're spending borrowed money on something that will never pay for itself. Now look at America. The United States currently maintains roughly 750 military bases in over 80 countries. The annual defense budget exceeds $886 billion. That is more than the next 9 countries combined. Here's the number that should alarm you. In 2026, the projected interest payment on America's national debt will exceed $1 trillion per year. For the first time in history, the United States will spend more servicing its debt than it spends on its entire military. Britain crossed this threshold in the late 1940s. Within a decade, the empire was gone. The military didn't destroy the empire. The military spending, funded by debt, funded by reserve currency privilege, drained the empire's economic foundation until there was nothing left to stand on. And by the time leaders notice, they're already in stage 3. This is the stage that kills empires silently. And it's the one leaders never see coming because it looks like progress. Britain invented the Industrial Revolution. For 100 years, British factories produced the steel, the textiles, the machinery, and the ships that the world ran on. Manchester was the cotton capital. Sheffield was steel. Birmingham was manufacturing. Britain made things, real products, real exports, real wealth. But in the late 1800s, something shifted. The City of London discovered that financial services were more profitable than manufacturing. Why build a ship when you could finance the company that builds ships and take a cut of every transaction? Why run a factory when you could run a bank? The money was easier, the margins were higher, the work was cleaner. So capital flowed out of British factories and into British banks. Manufacturing started moving to Germany and the United States, countries that were hungrier and cheaper and willing to actually make things. Britain let it happen because the financial returns were better. Banking generated higher profits than steel mills. Insurance generated higher margins than textile factories. On paper, the economy was growing. The GDP numbers looked fine. The City of London was thriving. In reality, the foundation was being hollowed out. Within 2 generations, Britain went from making everything the world needed to making almost nothing. And when the financial system inevitably hit a crisis, there was nothing underneath to catch the fall. You can't eat financial instruments. You can't defend a country with derivatives. I don't think I need to spell out the American parallel, but I will anyway. In 1970, manufacturing was 25% of American GDP. Today, it's under 11%. The United States has lost over 5 million manufacturing jobs since 2000. Factories have closed across the Rust Belt. Steel mills are abandoned. Textile production moved to Asia decades ago. Electronics manufacturing moved to China. Even critical defense components are often made overseas. Meanwhile, the financial sector's share of corporate profits has grown from about 10% in 1950 to over 30% today. Wall Street became more profitable than Main Street. Finance became more important than production. And the logic was identical to Britain's. Finance is more profitable. The margins are better. The GDP numbers look great. Stock markets hit record highs. The banks report record earnings. But GDP doesn't measure resilience. It doesn't measure what happens when the financial system breaks and there's nothing underneath it. It doesn't measure what happens when you need to actually produce something and you've lost the capacity to do it. America made the exact same trade Britain made. Paper wealth over real production. Financial engineering over industrial capacity. Services over manufacturing. And we made it for the exact same reason. It was more profitable in the short term. This is the stage America is in right now. And it's the most dangerous one. Because on the surface, nothing looks different. The dollar is still dominant. Trade still happens in dollars. Treasury bonds are still considered safe. The system looks exactly the same as it did 10 years ago. But underneath, something is shifting. Slowly, quietly, and then all at once. Britain experienced this stage between the 1920s and the early 1950s. The pound was still widely used. London was still a financial center. The empire still looked impressive on a map, British. Government bonds were still being bought. International trade still used sterling. But country by country, central bank by central bank, the world started diversifying away from the pound and into the dollar. Not because they hated Britain, because they saw the math, they saw the debt, they saw the declining industrial capacity, they saw the military overextension, and they quietly started looking for alternatives. The key word is started. The shift didn't happen overnight, it happened over 30 years. And during most of those 30 years, British leaders genuinely didn't notice it was happening, because the pound was still being used everywhere. But trust was leaking. Slowly, invisibly, fatally. In 1920, the pound represented about 60% of global central bank reserves. By 1950, it was less than 20%. The dollar had become the new default, and Britain didn't lose reserve currency status in one dramatic crash. They lost it 1 percentage point at a time, one central bank decision at a time, one trade agreement at a time. By the time British leaders realized what was happening, it was too late to reverse it. Now look at what is happening right now in 2026. Saudi Arabia, the country whose 1974 agreement to sell oil exclusively in dollars literally created the petrodollar system, has begun accepting other currencies for oil. In 2023, Saudi Arabia accepted yuan for Chinese oil purchases. That's the first break in a 50-year monopoly, and central banks around the world have been buying gold at the fastest rate since the 1960s. In 2022, central banks bought over 1,000 tons of gold. In 2023, over 1,000 tons again. In 2024, over 1,000 tons. 3 consecutive years of record purchases. Gold is what countries buy when they're quietly reducing their dependence on someone else's currency. It's the financial equivalent of heading for the exits before anyone yells fire. None of this means the dollar collapses tomorrow. Britain's stage 4 lasted roughly 30 years. The pound didn't disappear overnight. It declined gradually, then suddenly. For most of those 30 years, everything looked fine on the surface. But the trend was irreversible. Once countries start diversifying away from your currency, once they start building alternative systems, once they start pricing trade in other denominations, the process feeds on itself. Each country that leaves makes it easier for the next country to leave. And the thing about stage 4 is that it's the last stage where you can still change course. If America cut spending, balanced the budget, rebuilt manufacturing capacity, reduced military overextension, restored fiscal discipline, the dollar could maintain reserve status for decades more. But that would require short-term pain, higher taxes or lower spending or both, closing foreign bases, accepting a smaller global footprint, making choices that are politically almost impossible. So the drift continues, the debt grows, the deficits continue, the alternatives multiply, and stage 4 transitions into stage 5. Stage 5 is the Suez moment, the day the creditors call the bluff. The critical lesson is this: it doesn't matter how strong you look, it matters how strong your balance sheet is. Britain's army was winning in Egypt, the ships were in position, the soldiers were advancing. None of it mattered because the economy behind the military was hollow. The moment someone with financial leverage decided to test that, the illusion evaporated instantly. Britain didn't get a slow decline, it got a revelation. 1 week it was giving orders, the next week it was taking them. 1 month the pound was a symbol of global power. The next month it was a cautionary tale. Within 10 years, Britain had granted independence to most of its colonies. The empire dissolved. The pound devalued repeatedly. Reserve currency status was gone. And Britain became what it remains today, a wealthy country, but a secondary power. America hasn't reached stage 5 yet, but the conditions for it are being assembled right now. What could America's Suez moment look like? It could be a debt ceiling crisis, where Congress plays chicken one too many times, and the world decides treasury bonds aren't safe anymore. It could be a failed military intervention that turns allies into skeptics. It could be the moment China dumps a significant portion of its dollar reserves to make a geopolitical point. Or it could be something nobody predicts. Something small that reveals what's been true for years, that the world's most powerful economy is running on borrowed money and borrowed time. When stage 5 comes, it comes fast. Britain's took 11 days. The Soviet Union took 900 days from peak to dissolution. The question isn't whether America will face a Suez moment. The question is when. Because stage 5 isn't a new problem. It's the revelation of problems that have been building through stages 1 through 4. The debt that accumulated, the military that overextended, the production that moved overseas, the alternatives that were built, all of it becomes undeniable in a single moment. 5 stages, every single one of them played out in the British Empire across a century, and every single one of them is playing out in the United States right now. Stage 1, the currency becomes the weapon. America has been here since 1944. Stage 2, the military outgrows the economy. Interest on debt now exceeds defense spending. Stage 3, production is replaced by finance. Manufacturing declined from 25% of GDP to 11%. Stage 4, the world starts looking for alternatives. Saudi Arabia accepting yuan, central banks buying gold at record pace. Stage 5 is the reckoning. Britain didn't see theirs coming until it was 11 days away. The pattern doesn't care about intentions. It doesn't care about military strength or national pride or how many times a politician says the economy is strong. The pattern only cares about math. And the math right now is identical. If you want to see the pattern from the other side, how Rome followed these exact stages 2,000 years earlier, watch this next.